It's fascinating. It's not gold bug negativity. Anyone should understand the lack of far-sighted thinking. You can go back to 1970. What's the patient zero of this type of stupidity? How did we get this way? And I said, we took the chaperone away from the dollar under Nixon when we decoupled from gold. That was one part of the thing. But that in and of itself wasn't enough to destroy the dollar longer term or the next generation at the expense of this one for such myopic thinking. But certainly going off the gold standard was kind of chapter one. And it wasn't even like Nixon or even other European central banks or the Fed suddenly just started going hog wild. It took some time to actually realize the power we had of an unchaperoned currency, that we really could go into more and more debt. And then without a gold ratio that we had to keep, we could actually create and broaden the money supply more and more. So there was that opportunity that we didn't necessarily take advantage of right away. It kind of came into the 80s when Stockman was there with Reagan. He started to notice this was a problem, the bond market of the 90s. But by the great financial crisis, Bernanke came in and he spent $2 trillion in printed money in 4 years. But then when we had the COVID crisis, Powell did $5 trillion in 18 months. So suddenly it became much more addictive than just an emergency measure. And I want to go back to even Bernanke under the great financial crisis. We bailed out the big banks for $780 billion. That almost seems like an innocent number now, $780 billion. It seemed insane when you and I were in the streets, so to speak, working West Coast and East Coast during that period. $780 billion to bail out the banks and AIG and Goldman and all. That's crazy. That's almost sweet numbers compared to the trillions we've gone since then. And remember, when we got off the gold standard, Nixon promised that it would be temporary. That was 55 years ago. In my entire life, we've never gone back. It was not supposed to affect the dollar. And when Bernanke started printing money, it was supposed to just be QE. Then it became QE1, QE2, QE3, Operation Twist, unlimited QE after the COVID hysteria. So again, it starts slowly, then all at once. The desperation, the addiction, the magical fantasy that this policy is actually a policy as opposed to a charade, a scam. And now the karmic results of that is we're running out of leverage as a superpower, as a hegemonic form of the world reserve currency, and we're running out of options to play with rates to solve the problem because we can't afford higher rates because of those trillions, those miles of debt stacked up. That the rest of the world sees, if you and I see it, the rest of the world sees it too. They are not buying our treasuries. When we did Liberation Day, the treasury auctions the next day, there was no one there. It was crickets. No one wants Uncle Sam's IOUs because we have too many stacks of debt. And we weaponized that same IOU in 2022. Whatever you think of the Russian-Ukraine war, we've lost trust and credibility because of debt and bad policies. And so the only way to solve the delta between our debt and our spending, we had deficits of $500 billion in 2008. It was then annual about $1 trillion after COVID. Now we're looking at $2 trillion spending versus income every year in America. It's getting worse, not better. I'm not making this up. These are just hard facts with trillions of dollars behind it. When I make fun of America, so to speak, or criticize American financial policies, I'm only doing that because it is the home of the world reserve currency and it is sacred 10-year treasuries, a tier one asset. But yes, to your point, and believe me, we could spend a long time talking about all the problems the EU has and certainly China. So I'm not saying that America is alone in this. But to your point about gold and why it's making the headlines now and why we've foreseen this for years, it wasn't hard to see the exponential rise of gold, not because gold was doing anything more active, it's because the exponential rise again in debt meant an exponential debasement of the currency to monetize that debt so that your fiat money, that beautiful ice cube, was losing purchasing power. When we weaponized that 10-year FX reserve of a major nuclear power in 2022, the world, for two reasons, stopped trusting the American dollar or the 10-year IOU the way it used to in the past. A, it's a weaponized asset. You don't trust as much. If they can do that to Russia, they can do that to anyone. And B, it's over-issued debt from a discredited, more and more indebted issuer. So there's a number of reasons, but if you saw what central banks were buying, I've said this many times, 118 tons prior to 2022, central bank purchases of gold went for 290 tons, almost 3 times X. And if you read the Gold We Trust report that just came out from Ronnie Sturfel and Mark Balick, the central bank purchasing of gold is not because they're chasing price action or because it's a better return than the S&P in the last 20 years, which it is. The reason they're stacking gold and the reason the BIS has made gold a tier one asset and the reason the COMEX is seeing outflows and the reason even the IMF talks about a new CBDC with gold coverage is because that tier one asset, physical gold, stores its value better than a US 10-year, the risk-free return, which again, when measured against real inflation, not the BLS's inflation, is return-free risk. There's just no return. You're not beating inflation. So the central banks see what you and I see. They'd rather save in something that holds its value better than a US Treasury or US dollar. They'd rather save in physical gold and then spend in fiat. And then they'd rather net settle their trades in the BRICS in something they trust, even though they don't trust each other. They trust that store of value in gold. And that's simply what's going on. And it's the symptoms of it are everywhere. It's not just the price action. It's the demand from, I'm not a big fan of central banks. I'm not a big fan of the IMF. I'm certainly not a big fan of the BIS. You can spend hours criticizing all of those things. But they're not stupid, and they see the direction of the hockey puck very clearly, and they've been seeing it for years. We've been seeing it for years. Our clients have been seeing it for years, and that the one asset that the world goes to in times of crisis is gold because it holds its value. Bitcoin has used the store of value case, the same fear of debt, but gold holds its value better. And so it's just understanding that is understanding why gold is rising. It's not the sexy thing du jour. It's been outperforming the S&P for the last 20 years, total return. But family offices make less than a 1% allocation to physical gold. And there's a lot of reasons why. And it's the best performing asset this year, but it's been the best performing asset annualized for 20 years. And yet no one touches it. The smart guys, the family office guys, the former banks who are the CIOs of those family offices are not buying it. They're not touching it. And it's been clearly on the radar. But now, because of the headlines and the price action, it's suddenly discussed, but it's still woefully underallocated, which I find fascinating for a number of reasons. But it is remarkable, the misunderstanding of this. And there is a vested reason to make gold misunderstood. For one thing, it's an embarrassment to any monetary policy where the dollar is losing value. Gold is a red neon flashing sign that you have been criminally negligent in your monetary policies. Your dollar is disrespected and distrusted. Gold proves that, so we don't want to talk about it. I still have very wealthy clients say their advisors at Goldman or wherever they are in Greenwich to Palm Beach, their advisors say gold is too volatile. For 20 years, it's outperformed the S&P. And just now they're being told it's too volatile. So again, is it ignorance? Is it conspiracy? It doesn't matter. It's a deliberate misunderstanding of a simple thing called sound money. It's not just about price appreciation. So again, the world is turning to gold because fiat money has been doing what it does throughout history, losing its value as debt becomes greater and greater and politicians become more and more desperate. And that shouldn't be a gold bug case. Again, hedge fund managers and risk assets that I've traded with and known for years understand this as well. Bankers even understand this. They just don't talk about it out loud. But they come to Zurich and they store their gold in our vaults for a reason because they know this. But they don't tell it to their clients because they can't if they work for a big bank. And they may be trading long short equities or arbitraging credits at a 2 and 20 hedge fund. But when they make their profits every year, they store a big chunk of it in the gold. It's not an apology for gold. I'm just trying to say the smart money is doing this. The family offices were run by kind of bankers, I hate to say it, aren't doing this. And the sad thing is the middle class who can't afford rent and groceries and a vacation, they're left out in the cold. And we keep saying to them, you can always afford a milligram or an ounce of gold, but you know what? That's not always true. And that's the real sad part. And that's not me trying to be falsely compassionate. It's really a problem because I am from that lower middle class background. I grew up there. The men and women in my town, they couldn't even imagine buying an ounce of gold at 30,000 plus. That's a luxury to them. I said for years, I never saw the US dollar being gold backed. Even the BRICS aren't doing a gold backed BRICS currency. They're just doing gold coverage in their net settlement. So it is a trading currency, not as a redeemable currency that you can redeem in Shanghai or Moscow, but they are using it to net settle trades. So in that regard, I see gold having a higher and higher role. The reason I say is no country, whether it's in the BRICS or the US, wants to take away its power to debase its currency. It's such a powerful and seductive thing to have. So why would you want to add a chaperone to your money? It's the cross of gold speech that William Jennings Bryan made way back, that it does limit your ability to extend credit, the gold-backed currency. So sound money, which academically and theoretically makes sense, is actually politically very unpopular. The leaders who every now and then during wars, and we've seen it throughout the US history going on and off a gold-backed system since the Civil War, we like the power to debase our currency. So I don't necessarily say there's going to be a gold-backed yuan or gold-backed dollar anytime soon. What I do think was telegraphed in 2020 was the new Bretton Woods 2.0, this farcical video that you can still see on the IMF website. And Christina Georgina did this. It was literally called the new Bretton Woods. And they were using COVID as the excuse for a global reset due to the debt crisis that COVID created. And again, I said in 2020, that was an absolute lie. It wasn't COVID, it was decades of banks like the IMF, the BIS, and the Fed debasing currencies. But they wanted to take no accountability, so they blamed it on COVID, nice and neat. Now we have a debt crisis. At some point, we're going to have to restructure debt, have a new Bretton Woods moment where it's a big kumbaya, and we'll have a new currency, and that's when they were going to roll out a central bank digital currency. Again, I'm not making this up. You can go to their website. It's right there. no accountability for their sins. But the solution they were presenting 5 years ago, which is what they always do, they telegraph it early and then they bring it out and say, I told you so, was some form of centralized or central bank digital currency. That's centralization at its finest. Liquid, central bank backed. But even in that highly centralized, programmable, trackable, evil thing, which is very safe and liquid, even in their chart on that video, they talked about gold as some type of coverage ratio because they knew a CBDC, which is to electronic fiat, would not be credible without some coverage to a hard asset like gold. Otherwise, it's just electronic fiat versus paper fiat. And so the IMF was already telling us, I think then, where they want to go with this. Now, will it happen? How will that work with the BRICS? It's all kinds of unknowns. But you can see their thinking, just like you could see the BRICS thinking in Kazan last year. Gold is part of their equation at the IMF. Gold is part of the equation at the BIS as a tier 1 asset. Gold is clearly a part of the BRICS net settlement trade already and to come. The Shanghai exchange is becoming more and more popular and powerful than the London and New York exchange. China has a lot more gold in the World Gold Council. This is all my way of saying there is some type of digital centralized reset, not a gold-backed dollar or yuan, but probably some type of central bank digital currency with a gold coverage. That's my theory. I'm guessing, I'm speculating. I don't think you're going to see Trump or the next administration suddenly back the dollar in gold because we don't have as much gold as China. Then we'd be shooting ourselves in the foot. So it's a lot of unknowns. But I think, those with the money and those with the power make the rules. Fiat money is just whatever the government tells you it is. What the IMF, which is very powerful and the BIS, is they're kind of hinting that we're heading in that new direction, a Plaza Accord, Bretton Woods 2.0. This was, I think, the direction they were going. And I still think that. But I don't think Trump's going to announce a gold-backed dollar or Xi anytime soon. They don't want to limit their power to debase. But if we get so bad in our global debt in the trillions, necessity is the mother of invention. They will blame it on extraneous events, never themselves, and then they'll impose on us centralized digital currency. And to me, that is the ultimate arc at, it's debt crisis, market crisis, currency crisis, inflation crisis, social unrest, always, without exception, followed by centralization. And to me, central bank digital currency is the final insult and the final solution. And it ironically will have a gold coverage ratio to it. And that's where I see it going, not a gold-backed dollar.